me get Victor Adair in here. I got some questions for him. Vic, I want to start with the big question. We hear all this Trump effect stuff, obviously, because we had that monster move after the election. What was it? The second biggest move since the biggest move rather since Dwight Eisenhower in 1952 on a wide variety of things. But it seems to have lost steam. As rallies do. But what do you make of all that?
I kind of break it into two parts. In the 6 weeks immediately following the Trump surprise win in the election, we had a strong move. In other words, interest rates in the United States moved sharply higher. The U.S. dollar moved up about 4%, which is a pretty good move. And certainly U.S. stocks and stocks around the world jumped higher as well. The gold price fell. And then once we hit the 15th of December, that was kind of my key date. That was the day interest rates peaked out and started to turn. And I think that interest rates, American interest rates, are kind of key to all those other things. Key to what the dollar's doing, key to what the stocks are doing, key to what gold is doing, that sort of thing. The U.S. interest rates peaked on the December 15th and started to go the other way. So the power of they call it the Trump effect, was very strong for 6 weeks, and then it's kind of petered out here in the last month.
But again, what do you make? How do you use that now as a trader? Has the market changed for you? Have you changed positions because of this? Did you take profits? And that's one of the things the mainstream media regularly gets wrong. They forget it's not really a change in the environment. People simply made enough money and they took the money off the table.
Yeah, there's two things. There's the things you do and the things you don't do. Now, the acceleration of the U.S. dollar on Trump's election, I got left behind on it. I'd really gone to the sidelines ahead of the election because I had no idea how to handicap it or really what was going to come along. So I missed that, and I just didn't chase it. And at this point, I'm happy I have, because the last 3 weeks here in a row, the U.S. dollar has closed lower. We did before, mid-December or thereabouts, we covered our short position in gold. Mid-December, we started selling out-of-the-money puts on the bond market. In other words, we thought the rise in interest rates had been too strong and was going to reverse, and that trade has worked for us. As I mentioned last week, a trade that we put on that has not worked, we've been losing money on, is I was looking for the U.S. stock market to roll over. We bought some out-of-the-money puts because as time goes by, the options lose value. We're losing money on that trade. So, and then one other thing, I guess, the Japanese yen fell 15% from the overnight extremes when Trump was elected to where it was in the middle of December. I just thought that had gone way too far, and we started to sell option positions against that, and that's worked in our favor.
Hey, we've got just a minute or two left here, but I got to get, can we just elaborate a bit on oil for me?
To get right to the meat of it, I mean, the thing that really stands out for me with crude oil is there is huge speculative positions in the oil market. Let me put it this way. We call the futures markets paper crude. The speculators have bought $45 billion worth of crude oil. Who sold it to them? The commercials. And commercials are people who are in the business of producing, refining, marketing crude oil. We generally think producers in in any market are smarter than the speculators. Maybe, sometimes they're wrong. But my thought is, and I'm going to stay with, the Joseph Schachter view, that the supply-demand inventory story is still bearish on crude, and this is the big if, and this is the trading if for some reason the price of crude starts to decline from here, those speculators will start to sell, just like the speculators in gold. We got this huge gold position post-Brexit. As gold started to come down, those speculators sold out their positions and helped drive down the price of gold. We think something similar could happen in crude oil, so we've got a net short position in crude.
Yeah, it's going to be fascinating. And, I mean, every year you need that you see what happens in January, but that's why I'm looking forward to the World Outlook Conference, and you're going to certainly be there. And it's a great chance. I mean, Victor's a lovely person, and he's very affable, so it's a great chance to come and chat with him. And so I look forward to seeing you there myself, Vic.
Mike, I'm looking forward to seeing you, too, and I hope you're doing a little dance, something an improvement over what you were doing last year.
Yeah, oh my gosh. We've had 2016, not my favorite time. Vic, I look forward to seeing you. We'll talk to you then.
Okay, Mike, thanks.